And the panelists, maybe I would like you to introduce yourselves.
I'm Dainius Vilčinskas. I'm representing traditional financing institution, Swedbank.
Hello, I'm Andrius Bogdanovičius. I'm CEO of local credit bureau, Credit Info. Maybe I say some words what we are doing in Lithuania, actually. In 10 years of activities, we created infrastructure through which banks, payday lenders, leasing companies, telcos, utilities are exchanging data on customers, meaning that you can get information how many loans I have in another institutions, what is my salary, what is my address, etc., etc., etc. So all financial institutions are exchanging data through us. And I would say that if to compare with Latvia and Estonia, our credit bureau is probably the best if to compare with Estonia. Second thing, what we are doing, we are actually creating scoring models for different type of sectors. For example, we created scoring for Telesonera Finance, who is financing acquisition of telephones. We have created scoring models for payday lenders. We also now developing some scoring models for peer-to-peer platforms. And we even developed a scoring model for National Bank of Belarus. They are selling these scorings for commercial banks. So we have huge experience in creating scoring models, and our vision is that peer-to-peer platforms will have the best scoring here in Lithuania. And actually, we started to work with peer-to-peer platforms only recently. They started activities in 2015. We don't have much statistics on that, but I can share some insights about the market.
Sigitas Mitkus, Ministry of Finance, Director of Financial Markets Policy Department. Previously, I had been working at the Ministry of Foreign Affairs. I devoted 15 years for Euro integration processes, and I spent 4 years working at our embassy in London, and had opportunity to work with the people in the city of London.
Vytautas, I'm a co-founder and CEO of SAVY. I introduced myself briefly in the first panel.
Arturas Arain.
Okay, guys, thanks. So let's begin. So the agenda here, we have sub-themes that I would like to discuss. Maybe firstly is a small intro, and then we would like to discuss the impact that crowdfunding and peer-to-peer lending has on the traditional financial markets. The second thing is maybe more of a broader consumer value that crowdfunding and peer-to-peer lending can bring to those markets. Then the third subtopic is how how peer-to-peer lending and crowdfunding influences the government process and what's currently really happening. And then the final discussion, maybe it would be a discussion about the vision that we have in this country and the reality that we have. So maybe let's begin by you, Arturas. Can you briefly, because we're using different terminology here, and the purpose of this conference is actually education. So a lot of the people in Lithuania are not really familiar with this. So can you just, like in two words, describe what is crowdfunding and what is peer-to-peer lending?
Yeah, so P2P lending is basically consumer lending when people are lending to people. And when we are talking about crowdfunding, we have financing for business ventures where people and other legal persons can invest into other legal persons.
Thanks. So let's move on to the impact that we can make here. Crowdfunding and peer-to-peer lending, really, that's active at the moment. And I would like to begin with our colleagues at the traditional banking sector. Dainius, what's like your view as a bank representative on peer-to-peer, on crowdfunding? What is it that you think, what is the effect that it will have on your clients, on your customers? How do you view that? Do you notice any effect whatsoever, or please comment?
Okay, thank you. For me, it's really interesting to be here because here are mainly people from alternative sources of financing. and SAVY and your competitors who are here, you are trying to promote the idea. So in the bank, we see that in the financial industry, we started kind of seeing new competitors. The ones that are emerging mainly due to kind of technological changes that are enabling the change. And to a large extent, regulation is becoming really active, and banks are becoming really heavily regulated when alternative service providers are not that much. So in the bank, we're really closely keeping an eye on the change, and this trend is really exciting. When we analyzed and when we noticed the trend, we started thinking, so what's the main benefits of P2P lending or crowdfunding platforms? And then we came up to the conclusion that it is easy type of service, most likely positive customer experience for the ones who want to borrow money, and maybe to the ones who want to invest or lend money. And everything is happening very, very quickly and online. So it's very easy and light. When to compare with the banks, we are not that easy organization due to regulation. So we are well established. We have a strong capitalization base, and we have risk evaluation models that are being developed and approved by FSA in each of the countries. And these models are running on a big amount of data that we have about our customers and about the economy and about external factors. So we are a bit different, and I heard today that P2P platforms, they're not going to compete with the banks. They rather look to the niche in the market where they could become relevant to the customer. So this is a really positive sign. So hopefully the platforms will bring a really strong positive impact to the market. But at the same time, platforms, by providing investment possibility or easy access to money to people or companies who normally most likely will not get financing offer from the bank, they as well create a risk to investors or lenders. And as platforms are only intermediating relationship between parties, they are not taking any risk on their own in most of the cases. So at the end of the day, lender stays alone with his decision to invest money or not to invest. And he has to rely on his expertise, understanding, and the general information that platform is providing. And based on this information, he has to make a decision to lend money or not to a person. So by saying this, I think in summary that platforms most likely will have a niche in the market because they will always going to be the ones who want to assume high risk and invest money with high yield. And they will always going to be the ones who want to borrow money. And the reason for borrow money might be different. In the US, more than 50% are borrowing to refinance the exposure. The reason for refinancing could be different. Maybe they want to restructure their liabilities. Maybe they want to cut financial costs for the exposure. It might be different. So, but the platforms bring a value for both of counterparties. And then this is the matter of regulation, how the regulation has to be heavy, but it has to be in place for sure because it has to provide some protection to lenders and to borrowers. And we should not forget AML, anti-money laundering regulation, and KYC regulation. This is very applicable for the banks, and I think for platforms this should be as well applicable. So, in summary, I think positive impact from the platforms is such that it is providing new alternatives to many people and companies. And platforms, this is a big innovation to the market. So thanks to different fintech companies, banks are now innovating companies as well. Nowadays, we are all innovate.
That's a very positive note, thank you. An interesting approach, actually. Sigitas, a question to you. You mentioned your relationship with the city, and that you traveled and you checked whether the law will be well received. And UK is one of the most advanced countries. For example, they just opened peer-to-peer to, or in the process of opening peer-to-peer to pension accounts that private individuals have. Also, if a person cannot get a loan, a bank is obliged to refer that client to a platform. And you've seen how much, how actively in the US banks are participating in buying loans originating by platforms. And the securitization issue that we've discussed by Jason earlier in the day. And the law here is a blank page. What measures, if any, do you plan for crowdfunding and for peer-to-peer separately to strengthen, cooperation between the traditional financial sector and the platforms?
Thank you. A few years ago, when we started thinking about alternative financing for SMEs, of course, crowdfunding was one of the instruments, and we started thinking about the regulation. And the draft law on crowdfunding and law on consumer credit, which was adopted last autumn and provisions related to peer-to-peer lending, showed our very big intention to focus on new instruments, new financial instruments for our businesses. You mentioned information sharing. I remember our meeting at the Ministry of Finance in October when we were after our visit to London, and there were people from banks present, also people from crowdfunding communities. And we were talking about information sharing, whether the banks have to be obliged to refer client to other institutions, like crowdfunding platforms. So I got impression that the answer from the banks was positive. Of course, it will depend on the partnerships. Good cooperation between banks and crowdfunding platforms. But if there will be a need to somehow to include the reference in one of the laws and oblige the banks to cooperate better with other institutions, why not? And we will see how it will function in practice.
But you don't have such a measure in the law yet, right?
No,
not now.
Not now.
Denis, maybe you have a view on that, like a comment to this. How would your bank view this?
Actually, this is something new, and we were not thinking about it. So it would be difficult to give you a straight answer to this. But first idea that are coming to my mind, there are pretty strict regulations related with data, and especially in case of a bank, this is kind of the highest intimacy customer data. So it should be really well thought through how the two different and not related organizations would be exchanging data. This one thing. Then the other thing, the banks are operating risk models that were well tested during different economical cycles. So assuming that some of the customer is not getting financing offer from the bank, then this is most likely the reason is that the risk profile of the customer is much higher. So directing customer to alternative funding source, by doing this, the bank would assume some of the responsibility that he doesn't want to lend money to the customer. Then why somebody should assume the risk that we were not ready to take? So it's a bit vague area, and seems to be seen how this will be organized.
Okay, thanks for your approach. Maybe anybody wants to comment on this?
I would like to make a comment on Dana's thoughts.
Yeah.
I think that when we're talking about referral system, we should understand that the bank is going to share information only with consent of the borrower. And basically, we should understand the second thing, that banks are more conservative compared to platforms, and they have their own risk approach, where platforms are the same consumer credit providers, they have the higher risk approach compared to banks.
Yeah, Sigitas, you want to make a comment?
Yes. In addition, what I just said, the government is going to also to provide all information about all sources of financing in one of the websites of the one of the agencies, Versli Lietuva, and of course it's very important that awareness of the financial instruments would be higher than we have now.
Thank you.
I would like to add that actually, even if the law do not foresee this possibility to share customers from banks to peer-to-peer platforms, competition will lead to that, because some small banks today is discussing with some financial companies about possible cooperation to exchange with customers whose banks cannot accept because of the risk. So I think that banks will, maybe smaller banks at the beginning, will want to create some additional services to small and medium enterprises, and probably they will share some earnings on that. So I think that competition will lead to that cooperation.
Yeah, that's actually a reasonable point. So a question to you, actually, Andrus, from your perspective, discussing crowdfunding and discussing peer-to-peer lending, you as a credit info, as a bureau, do you think like the market as in total, is it expanding, is it contracting, the credit market in Lithuania? And what is the effect that peer-to-peer is having on the market at the moment? And what is also an effect that crowdfunding might have? You know, given your experience in other markets, maybe you can share your view on this.
Okay. And during the last few years, what we saw it was that consumer credit market was growing. It was growing fast, and if to talk about 2015, we saw that number of people who got the consumer loan on the market was about 170,000. So it's 6% more than in 2014. On the other hand, what we saw the last year, that number of contracts decreased. I mean that in 2015, number of contracts decreased by 3%. And however, at the beginning of this year, in the first quarter, what we see that we see a sharp decrease in consumer loan market.
In this quarter?
Yes, in this quarter. And the main reason, I guess, it's stricter supervision from central bank. And another reason is new changes in consumer law. So talking about peer-to-peer platforms, I think from consumers' perspective, it's simply additional distribution channel. It's the channel where they can get a credit, actually. And what we saw the last year, when you started operations on the market, the fact was that 91% of credit applicants who applied for a credit in peer-to-peer platform, 91% had the consumer loan in the last 2 years. 82% of credit applicants applied for a loan in traditional consumer credit company after they applied for a loan in peer-to-peer platform, meaning that you have more or less the same customers. So as such, peer-to-peer platforms will not create additional market. I think that payday lenders, when they started operations in Lithuania, I don't know, 7 years ago or something like that, they created some new product on the market, this fast loan. Peer-to-peer platforms, I don't think that they will do the same on the market, especially taking into account stricter regulation from central bank.
But what about refinancing? Because the business that these platforms are actually doing is refinancing the payday lending loan and solving this problem of mispricing in the market that currently exists. Maybe that's something that they should sort of, that's the value that they bring, and that's something new.
Yeah, for sure, they are competing for the customer and they're decreasing price of the credit. And actually, peer-to-peer platforms, what I expect, they will increase or improve financial literacy of individuals. Because, let's say, I know you probably asked me that question, but 4 or 5 years ago, we started the platform where individual could get information about their credit scoring. Today we have 170,000 people who are tracking the credit scoring. And they're asking what it means, how it can be improved, etc., etc., etc. So peer-to-peer platforms, from my perspective, I think you will bring some financial literacy, more knowledge about credits, better prices on the market. This is what you will do on the market.
Thank you. Vitas, a question to you. Maybe a slight shift from the peer-to-peer versus traditional. You've created this market, right, in Lithuania, and now you've got competition. You've got competition, and there is a crowdfunding, like several platforms already working in the market, and there are crowdfunding law in place, and there are probably going to be other platforms. Do you expect consolidation in this market, and like maybe you can comment?
Well, honestly speaking, we have to understand that there are some rational things that is going on, and there are irrational things. So the rational things are economically based. Basically, what Andres mentioned is they're like number-based metrics. Irrational things is basically based who are running the platforms and who are the owners and who are the managers of the platforms and how they behave. And consolidation basically in Lithuania is driven by the irrational movements. They will not be driven by rational, let's consolidate because we will be stronger together, or we will get prices better. The same, for example, credit info. It will be driven only by irrational decisions. Either we are out of money, or maybe there are some personal gains or achievements that someone wants to achieve. So I don't necessarily believe in consolidation in the nearest future, because everybody looking at the typical Lithuanian, everyone are like really cool and strong, and they're the best from themselves, like honestly speaking. So my view is that we need consolidation because the 5 platforms already in this small market is too much. I think at least 2 to 3 platforms will start operating in the coming 3 months. Depending on the law of crowdfunding, I'll guess there will be 5 platforms. If we count also the ones that are operating now in peer-to-peer, they will start their SME lending activities. So we will have a bunch of platforms in the end of the year. How they will survive, how they will act, it will be driven basically by irrational decisions by the managers and the owners of the platforms, but not by the rational metrics that it's better or it's worse to consolidate. So it's hard to tell at this point.
So it's a lot of competition ahead. That's good for the consumer.
Yeah, I think that basically I told someone, and I to tell basically most of the peers that we plan ahead like 6 months. We started the operations in 2014 in August. We had the goal to survive until Christmas. Yeah, let's survive. We survive until Christmas, and the next goal will be okay. Based on what's happening now with the national bank, with the problems, not the problems, but the challenges that we had from the traditional payday lending companies. They tried to fight us, the model. We said, okay, if we are here 6 months from now, like June 2015, we are celebrating. We achieved something. And June came. We thought that we will get the competition most in summer. We got most of the competition in the end of the autumn. So now it's now it's the fighting time, if we can say in the terms. Whether it is necessary to do that, I don't know. But it's just this period of time. It will last until the end of autumn, maybe winter. Someone will run out of the money. Someone will run out of the energy. We'll see how it ends and how it plays off in the end of the year. So my view is this.
Anybody wants to comment on this, or okay. Yep.
I rather have a question. What will happen to lenders or borrowers if any of the platforms decide to stop operations?
It's a really good question. So one of the things that we proposed to the National Bank last year when we got this chance to propose our views on regulation is that we have to have a continuity plan, as UK has in their regulation. And now the platforms are thinking of their continuity plans. There are none filed yet to the National Bank. Again, we have 5 platforms. Everyone are thinking how to ensure their stability and continuity if something happens. And we had a discussion that we should handle this to association. We have the Alternative Lenders Association in Lithuania. We were thinking to pass this obligation or possibility to the association. Now we are thinking a bit that we should have separate independent lawyers so that would handle our portfolio and then make a tender, and the one that would win the tender of the administration would get the administration. So it's a mixed feelings now, and we don't have the clear answer. We are working on it. We will submit our plans. We will speak with the colleagues, with other platforms, how we can cooperate. We are submitting the data to Credit Info. We are finalizing the submission of data to Credit Info, so all the data will be in the bureau. We are making the copies of the data twice a day. If we get some problems with, for example, hackers, that we almost get like once a week. So there are a lot of things that might happen. We're very vulnerable in this stage. The platforms are really young. Some of them they have really big IT problems, security issues also. We're thinking actually to do this as Facebook and Google and Apple does that. They say that, look, you have a critical problem in your website, like in your system, and if you won't fix it, we will announce it publicly. So we are thinking also to do that because the problem in the other platforms, IT security, is our platforms, our problem also. So it's a very young stage. One failure of the platform in Lithuania will damage all the market, and I think there will be at least some bad movements in the market in the upcoming year.
Okay, let's maybe not focus on the bad things, focus on the good things. Competition.
It's reality.
Yeah, reality is reality, and we will see a lot of things in the future we don't know about. But then the question is, let's move to our second topic, and I would like to discuss the value, right? Competition always gives this key thing about, we talk about consumer value. We're here creating, making money and creating consumer value. And crowdfunding is different. It's equity-based. Peer-to-peer lending is different, right? So question to you, Vytas, do you create consumer value, and in what way? Like, how do you view it?
Well, based on the data that Andrius presented, so basically we do not create a value for the market players, meaning that we didn't create that much of business. Well, we created actually new customers for Credit Info, for example, but we didn't increase the market size as it is, because 170,000 people, they see where the best deal is. And this is where we come in. And as I mentioned in the first panel, is what I heard from various governmental officials is that we made the competition start. And regulation is one thing that made competition. We made this movement, and the competition started. We see the prices going down. They will go down like further. Some platforms are using just regular scoring models. We are using statistical scoring model, risk-based pricing. We think that this is the right approach. We think that if you have bad credit history, you should be paying 60% APR. If you have a good credit history, you should be paying 8%. And this is risk-based pricing.
So that's risk-based pricing that's the value that you bring to the marketplace, right?
Yeah, we will be willing to use more data. If we could receive data, for example, from the banks, we would be using much more advanced scoring models. We cannot do that. We rely on official data, public data, and the data that we collect. For example, the behavior data on the website, the data that we collect from the phone calls, the social data that we collect also. But I would like to use 500 data points in our credit scoring if we would be able to do that, but we cannot. We can use, we don't have enough data yet, but we will get there. And the value for the customer basically is the possibility to choose, and the competition always is good for the customer, for the end one.
What about the point that a colleague from the bank, Denis, was making, that you basically, platforms as such, they provide credit not necessarily to the good credit people. Like banks are more conservative and they generally have better quality credit.
Yeah, I agree and disagree with this point. I agree with this point that I mean that we have to understand that we, all of us, like all of the people here, we are in some statistical group, basically. And if we take this approach, I have the probability to default. Arturas has the probability to default. All of us, we have probability to default. And the banks may issue a credit to the person who they think that has less probability to default. We might get other customers who has higher probability to default. But we adjust the risk and we say, okay, your probability to default is 15%, right? So you should be paying 35. And maybe the bank would say, okay, 15% default probability is too high, and we are not issuing the credit. And there's no disagreement here. It's just that all of us are different, and all of us should get access to credit. The question is, who is servicing the credit? The banks, the payday lending companies, the credit unions, the peer-to-peer lending companies. It's just natural. We are selecting whom to work with, and we are not competing with banks here at all.
So thank you. Maybe you have anybody has a comment on that, or yeah. So let's move. Generally, the question I was asking, why is the question that I was asking is that the government seems to perceive peer-to-peer lending or consumer credit not as a positive thing overall. If you in Lithuania, if you borrow for you buy. You name it, go to a holiday or buy a washing machine, not necessarily a good thing. You should maybe, go and take a business loan. That's a good thing. So a question then comes to crowdfunding, which is sort of the good promoted part of the day. And maybe the most appropriate question is to you, Arturas. What do you think is the main value that a crowdfunding law can bring to the marketplace and to those people waiting to get access to finance that they currently cannot have?
So I think the most important thing that crowdfunding brings is an alternative source for financing. And when small and medium businesses cannot get financing from the traditional sources, they can test their attractiveness in the market and go to the crowdfunding platforms and ask people or other companies that are they are keen to get the risk and to get higher interest rates for their investments. So I think that even for strong small and medium businesses, it's going to be a good opportunity to negotiate with traditional investors, traditional banks, the terms of the credit agreements. And basically, the crowdfunding is going to open the place for financing when other doors are locked.
Yeah, thank you. So what I hear now, I understand, is that peer-to-peer lending has a value in the marketplace. That you know, you offer credit, you offer a credit at a better price, maybe you know, extend it to the classes of people that couldn't get credit otherwise. And crowdfunding maybe also offers that, well, should offer that in the marketplace.
Yeah, basically, just another comment. The acceptance rate of credit applications in banks last year was in Europe 39% only. So basically 61% of credit applications are denied. So basically crowdfunding should deal with 61% of SMEs.
Vitas, maybe you can, what's your acceptance rate in the platform?
Well, in February we accepted 5%, but as last year we had CEO of like co-founder of TrustBuddy, and he said like, yeah, it doesn't matter what's your acceptance rate is, maybe 5% is bad credit. Yeah. So it doesn't matter at the end of the day. But again, I think that we have to look at this as a adjusted risk, and if the bank doesn't give you a credit, it doesn't mean that you shouldn't get a credit. It just means that bank doesn't take the risk and doesn't want to take the risk. And maybe you should be paying a higher percentage and you can go to shop elsewhere. Of course, I really like that. I recommend like reading a good read of JP Morgan CEO about the future of finance 2 weeks ago in Bloomberg. And he said like, sometimes, yeah, we should close the door to the client and we should not issue him credit because he's not worth it. And I think he is right here. It's just, you know, sometimes you're right, sometimes you're wrong. And if the client maybe he had like fraudulent activities recently, so he shouldn't have access to credit. But again, we should give as much possibilities as possible. And now I agree with the opinion that 2 years from the day that Sigitas mentioned that they started to think about crowdfunding law, it was a completely different situation. 2 years from now, 2 years ago, you really had to have alternative in finance. Now, I think if you have good credit history and if you have good solid story, the bank should give you a loan. I think we already hear that the banks are lending. It's my approach. So platforms which will start lending to businesses, they have to really price the risk that they will be taking on their investors. So that's a really like an important thing that they have to think about.
Yeah, thank you. Danish, you had a thought?
Yes, I had some comments. The fact that banks are declining big number of applications is presented kind of from a negative perspective. But actually, this is the outcome of regulation. We in the banks, especially after financial crisis, we have to be very careful with the risk that we're assuming. And as we are injecting our own equity, not only lending our depositors' monies, we have to be careful. Therefore, the ones who are keeping deposits in the bank should be happy that the banks are very cautious in assuming the risk. But the other important thing is that the banks, when are issuing credit, they have to allocate equity. So the riskier credits they're issuing, the more equity they have to allocate. This is not the case for platforms. In general, platforms are not taking any risk. So in case if a borrower goes defaulted, then this is the loss for a lender. So this is the main difference between banks and platforms. And especially speaking about crowdfunding, from the bank perspective, we really welcome this initiative. And after financial crisis, Swedbank was actively promoting that in the market, other alternatives of raising funding should be developed. And we were actively meeting different politicians and officials trying to think how to develop a bond market, how to develop stock market, how to develop other alternatives. Because financial crisis just showed that when liquidity was gone from the market, kind of everybody was in trouble, including banks and business and private persons. So these capital market alternatives are important. So this is the reason why we welcome crowdfunding initiatives. It's a bit sad that in Lithuania we still don't have them. And we would be really supportive for the platforms that are not originating financing, but the ones who would help small business to raise equity. Because we see many companies who have good business ideas and good business models, but owners simply don't have money to invest.
So Denis, you're not afraid of, because previously, before the crowdfunding, loan crowdfunding is enacted as a law, credit institutions, currently banks and credit unions, have a monopoly to lend to private companies. Well, in the sense that if you want to raise the money from the crowd, being a private company, you have to become public, and then only then you can issue bonds, which is kind of burdensome. Nobody's doing that, and you're not afraid of that, right? I mean, companies will not come to you; they will come to a platform.
This question is a bit funny because I never felt that we would be working in any monopoly type of market. In general, the Lithuanian banking market is so competitive that if you would compare prices that companies are getting in Lithuania with other European prices, kind of corporates should be just enjoying this low interest rate environment. And so banks are competing heavily. So this is one of the answers to your question. The other, no, we're not afraid. And it's a bit sad that platforms are speaking about refinancing customers from the other institutions. I would be more excited to see that they are discussing about how to expand the market, how to increase number of borrowers. Because if you compare the leverage level of Lithuanian economy with other better developed Western countries, Lithuanian economy is underleveraged, and this deleveraging is to some extent still ongoing. So this is something that we in the bank are looking for different ways how to make this financing to small-sized business more available. So hopefully this year we'll go out with some new ideas and initiatives.
But that's the thing, you mentioned about the competitive environment in the banking sector, but from the legal point of view, it's not a very competitive environment. It's an oligopoly structure of the market. There are not that many banks operating in Lithuania, and maybe as you were saying, you compete for the client, absolutely right, but only for a certain type of client. You do not banks compete for the client that you don't want to deal with, and these guys are left out of credit altogether. So that's maybe the focus of the platforms and the crowdfunding platforms.
Well, my quick answer to your question is that we welcome competition. And we as a bank, we're not only crediting company. This is the least thing that we do. Credit is just one of the services that we provide. We provide much more to our customers, including private customers or corporate. So
Sigitas, comment?
Yeah, thank you very much. Of course, the more alternatives we have, the better. But I'd like to comment and come back to the situation in our consumer credit market. And we see positive developments in this sector, and I'll tell you why. Since autumn last year, the Ministry of Finance has not received any letter from parents or grandparents of students or persons without income criticizing the institutions that they are doing nothing to fix situation. So it's a very positive result, because in the past we had been receiving a lot of letters from ordinary citizens. Now, another comment on competition. And we think that there is a lack of competition, especially in the banking sector. The concentration in the banking sector is big, and we would rather welcome more competition in this market. And why we have decided to look at the alternatives especially for SMEs. And I think that we are correcting the situation, and we are looking forward to seeing the situation which we have in 2 or 3 years' time.
Yeah, anybody wants to make a comment?
Maybe me. I just wanted to support Danius that banks are really competing for small and medium enterprises. They're simply seeking for very good customers because of capital adequacy requirements and other requirements that comes from Basel III, etc. So talking about competition, if you come into the market and offer for small and medium enterprises good loans, they will use that. I can tell you the story. 3 or 4 years ago, one of our customers came to me and asked the question, why some of the bank does not provide me a credit? Can you give me a credit as a company? I checked him, his credit bureau scoring was quite well. They had good financial. They asked from the bank only €5,000, and bank rejected them just because capital adequacy requirements, because they have to allocate capital for that loan. So what I did, I suggested him some companies who are doing that. And as far as I know, this company is still alive. They got a credit. They gave it back to the creditor, and everybody happy. And if we have situation today that near the banks we have crowdfunding platforms who delivers credits to small and medium enterprises, this is what we call competition. And the only thing I'm afraid that new law will constrain that competition. We should avoid the situation when the entry into the market will have some costs, big costs. So we have to make this market competitive.
Thanks for your comment. Really valuable approach. So maybe looking at Artūras, your firm has spent a lot of time and invested a lot of efforts into crowdfunding law. Will this thing eventually fly off, in your opinion? I mean, the government is building a plane. Will be anybody boarding this plane with a crowdfunding law?
Currently, we see in the market that there are 4 or 5 players that are already preparing IT systems, legal documentation, and they are looking forward to the new law. So also, we should look at P2P platforms. They have IT solutions, and it's not very difficult for them to shift to business financing. But I think I'm afraid that it would be difficult to compete for investors. We are living in a small market, and it's the question how to attract investors when we will have 4 crowdfunding platforms, and then we will have like 6 P2P platforms. And this could be a good question for Vytautas, how to attract investors, and how do you, Vytautas, feel about that?
Yeah, it's actually a good question. I would like to add maybe a slide, to Vytas. You've basically created a model that didn't exist. It wasn't regulated based on civil code, right? And then the government came and introduced the changes to the law on consumer credit, like put you in regulation. And that came after you did your job, right? Now with the crowdfunding, they're trying to put the carriage in front of the horse, saying, we will innovate, we will create this law, and then you guys come and you work under the auspices of this law. Do you think this approach is a good approach, and will it fly off?
Well, because we are running out of time, I'll be very short. I think there are 2 ambassadors in Lithuania now with crowdfunding, like 3. Artūras here, from the legal point, Sigitas from Ministry of Finance, and Ekaterina from National Bank. They're the ones that are really looking proactive to this sector. And the way that this law is built, they were really asking the market for their opinion. Not everything was heard of, but still, it's a good approach. I think we'll have 5 to 6 platforms, as Artūras mentioned. We will probably have liberal approach by the National Bank in the beginning. And everything depends on the managers and CEOs of these companies. Will there be fraud? Will there be default of the platforms? And then the regulation kicks in. And I cannot say what the National Bank will do about it, what the Minister of Finance will do about it. I just think that we will have an interesting year, and there will be some blood, I think, after a year.
Thanks. Yeah. So let's discuss. I know we're running out of time, but this is the critical point of the discussion. Let's move to the end of it, and let's discuss the reality. We have a law that's being passed, the consumer credit law, And I want to talk about, not about like the vision about crowdfunding, I want to talk about reality that exists at the moment. And here, question to you, Sigitas. Basically, the new law regulates peer-to-peer and puts a lot of limitations. To name a few, no institutional capital is allowed to invest. Then retail investors can only invest up to 5,000 euros per year, and then up to 500 euros per transaction. There are some other limitations, like you need, a man cannot take a credit for consumer purposes, consumption purposes, without getting a spouse consent. These are all limitations on the market. And then, why was that introduced? What's your vision? And why did you want to introduce these limitations?
Of course, very good question. And I just presented an example how we measure whether situation is good or bad in the consumer credit market. But talking about limitations and why we have introduced them. I was looking at your ad that people-to-people lending and individuals lend to individuals. And this is the point. And everyone remembers a situation which we had last year, also in the past. The consumer credit market had been developing very fast. There was a lack of responsibility from some of the market participants in the past. The peer-to-peer platforms started appearing in the market, and we wanted to avoid to have legal vacuum in Lithuania, and we decided to use this opportunity, having in mind consumer that we had been preparing consumer credit law on consumer credit. We decided to include parts related to peer-to-peer lending into consumer credit, in order to simply to avoid legal vacuum and avoid situation where we wouldn't know who does what. The limitations. The limitations have been introduced for the following reasons. First of all, to protect non-professional lenders, and secondly, to diversify the risk. And the future will show how this law will function in practice, and if there will be a necessity from the market, from the policy makers, from a regulator, then we will be able to come back to this issue and to revise certain provisions of the law.
Thank you. Arturas, do you have something to comment on that?
Yeah, I would like to comment that House Mortgage Directive is going to be implemented in Lithuanian laws, and during this implementation, the consumer credit law is going to be slightly amended, and it's a good opportunity for the alternative market, financing market, to show that it's the right moment to start changing and adjusting all those restrictions. So I think the market shows that restrictions are quite bad for the growth, and now we will have in the near future opportunity to change the law.
Vitas, please comment how they affect your platform.
Well, it's just the beginning. I think the regulator pulled, the strings, and and push the brake button, I think is good for the time being because we don't feel it now. In the end of the year, we will really start to feel this. And it is really unfair from this position that we see platforms from Estonia, Latvia, elsewhere. Everyone can invest there without any limitations. And we will not secure the investor because he will be able to transfer in SEPA payment the same amount of money to Latvia or Estonia, and we will be just not reinvesting the money to our economy back. So that's my angle. Otherwise, everything is good.
Okay, thank you. It seems that we're really running out of time, and we won't have time for questions. And I would like to thank the panelists for your time and effort, and really close this by a quote from an American actor and activist, Vince Vaughn. And maybe you can. It's probably appropriate here. Government claims to write endless laws to protect us. A law for this, a law for that. But are they working? I don't think so. The consequences is that there is a staggering loss of freedom for the individual. Thank you.